Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only, doesn't take your personal situation into account. With all of that said, let's get into our first chart. So I've got the S&P 500 here on the screen, and well, the market has made it through the notoriously weak month of September, and it's still trading up near its all-time high. And that's the thing with seasonality. It's an interesting historical reference, but often it's not that helpful when it comes to managing the markets in real time. So where to with the S&P 500 now? Well, looking at this chart structure, we've still got these rising moving averages. I've got the 50-day, the 100-day moving averages. They're continuing to trend higher. Price is still above those moving averages. That is by definition what bullish price action is all about. There's always room for pauses and consolidations. We're getting a bit of a pause over the last week. But at this stage, there's nothing here whatsoever that tells us we should be changing the game plan of being long equities. I think it's really interesting to look at the price action of two of the biggest stocks that make up the S&P 500, and those being Nvidia and Apple. So just starting with Nvidia, jumping over to a chart of Nvidia, and this is looking more and more like a period of consolidation. It's interesting when you look at this price chart. It's got the we can see just over the last few months. It's got the proportions of the classic triangle trading range. I'm just going to draw that on the chart so it's nice and clear to have a look at. And yeah, you can see those contracting boundaries of one of those triangle ranges. And it's also playing out, this consolidation is also playing out along rising moving averages. Prices come back to the averages, it's oscillating either side of it. So it's typical range bound price action. And when we just compress this, we look at where Nvidia's come from. It has been, there's no doubt, this has been a huge rally. But I think from what we're seeing with this price action since the June high, I think what we're seeing here is that the odds favour that we're going to see a new all-time high before the year is out. As extraordinary as that may seem, that is currently what the price action is suggesting. And then there's Apple. Go along, have a look at Apple's price action. And again, this looks like a period of consolidation. When we look at how the price action is shaping, look at these sell-offs. The sell-offs are attracting buying at progressively higher levels. So I think that's a positive sign. It's also, Apple also has these rising moving averages, again, the 100-day, the 50-day moving averages, and the price is currently on the good side of those moving averages. I like it when the price is above rising moving averages. That's currently the case with Apple. And like Nvidia, I think the way this is going to work out, I think we're going to see new all-time highs before the year is out. So together, these two stocks make up about 13% of the S&P 500. Coming back to that S&P 500, so when we combine what we're seeing with those two big stocks, and we combine that with the underlying chart structure that we have in the index, I think it's a case of remaining long stocks. Nothing here is saying we should change from that default position. I'm going to now jump over to the equal weight, the S&P 500 on an equal weight basis. So of course, S&P 500 market cap based. So those two big stocks make up 13% of the index. When we go across to the equal weight, well, of course, they just make up 1/500th of the index each respectively. And this is my preferred measure of looking at the state of the market. And I prefer looking at the equal weight for that very reason, that the bigger stocks don't have that same dominance that they do when we look at the market cap S&P 500. Now, I think the equal weight does a better job of helping us understand how the broader market is tracking. And this continues to show all the characteristics of an unfolding bull market. So what we can see on this chart, we have a series of higher highs and higher lows. That's been unfolding throughout the year. Again, we've got those rising moving averages, the 50 and the 100-day moving averages. Prices above the 100-day and the 50-day moving averages. And unlike the S&P 500, it's not dominated by just a handful of stocks. This is really giving you that broader depth of understanding about what those 500 stocks collectively are doing, rather than just being shunted around by the top few stocks. And broad participation, well, broad participation is the underpinnings of a healthy bull market. I've got one more chart to show you. First of all, though, if you're getting some value from this, please hit that like button. Please leave us your comment. Just, hey, thanks for the video. Tells YouTube you're watching. YouTube shows other people. Helps me heaps. Please do that. Click that subscribe button if you haven't already done so. Now, just to round this all out, the Russell, we haven't had a look at the Russell 2000 or the small caps index for a few weeks. And this segment of the market, it does continue to lag. It's still considerably below the 2021 all-time high. So it is still lagging, but the overall chart structure, I think it remains positive. Looking at the price action this year, we've got this series of, just have a look at this. We've got this series of rising lows throughout the year. So what this is telling me, this suggests to me that buyers are supporting stocks on pullbacks. And what they're doing while doing this, they're progressively supporting stocks at higher levels. So I think that's positive. And then along with the rising lows, we can also see that series of rising highs. And that, of course, by definition is an upward trend. Higher highs, higher lows, and that's what an uptrend is. Now, prices have been range bound since July. I'm just drawing the range bound since July, just chopping back and forth. Now, the great thing with ranges is they provide clear levels to watch. On the downside, I think it's the September low we want to watch. A breach of the September low would start to alter the chart structure. Price would be below moving averages. Vulnerability starts to creep in. So I think watch that September low. On the upside, I think it's the July high. I think they're the levels to watch. I think the odds are favouring a break to the top side, and I say that because when we look at these moving averages, the moving averages continue to trend upwards. So that to me points to the path of least resistance being to the top side. So I think overall, it's still, nothing has changed from last week in that it is still a case of being long equities. And let's leave that there for this week. Hopefully that's been interesting, giving you a few things to think about, and I look forward to coming back and we'll do it all again next week. Until then, bye for now.